Good morning. I'm Vince Lancy. Today's market rundown we'll be discussing, as you can guess, Bitcoin. The 10-year yield is up 4 at 421. The dollar is 106.19, down 17. The S&P 500 is 60.83, up 1. The VIX is 13.49 unchanged. Gold is 26.50, up a buck on the high of the evening. Silver 31.31, up 3 cents, on its way to a good breakout level. Copper 415 unchanged bid. WTI 68.71 down 12. Natural gas 288 stable. Bitcoin up 4,200 at 103 spot 0. So 103,000 is 103 spot for this conversation. Ethereum is 39.35 up 91. Palladium down $2. It's 9.74. Platinum 9.42 up almost $2. Grains are mixed. While soybeans unchanged at 9.85, corn is unchanged at 4.16, and wheat is 5.54. So wheat's up a nickel or so. All right, so there's the Bitcoin weekly chart. Should look familiar to you if you're looking at the if you're thinking about the gold cup and handle that we just went through. There's more similarities than that between these two assets, and we're going to try and bring back something that we did recently because it's current events again, and hopefully, well, you'll see for yourself. There's the front page or the page of the story. It's all about Bitcoin today. Today, it's all about Bitcoin, and then in the premium, we have analysis for Bitcoin destination 200,000. Now, that didn't come out today. That's not our prediction. That's someone whose report we want to go through in this discussion. Older reports that they're now calling for 200,000, and I'm not really that impressed with price predictions, but they did some work here. All right, there's the front page. Beijing strikes back, banning critical metal exports. That's a story from yesterday. We just sent this out. UBS go for gold in 2025. UBS, pretty much has been the stable bullion bank throughout this whole run. And they're being stable and bullish again, giving you the caveats. They also like copper, and they do think the dollar is going to weaken. No mention of silver in this. They will use silver tactically with their clients, but they don't really cover it that much. Okay. Bitcoin over 100,000, right? The laser eyes that were out there for a couple of years. Probably won't come off. They're probably so happy right now, as they should be. I'm long Bitcoin as well, but I didn't go laser eyes. Okay. There is a firm called BCA. You might be hearing more about them soon. They had a report comparing gold to Bitcoin in January of this year. We did a 3-part breakdown for gold people and for Bitcoin people. And we're going to touch on that a little bit. The reason that we're coming back to it is because they had a fourth report come, not a fourth report, they had a second report come out in November, which we sent to subscribers with some quick commentary on it. And it was a reiteration of their thesis of why Bitcoin's worth more than gold. They tweaked it a little bit, but it's going to become it's going to become more discussed soon. Zero Hedge did a premium article on it. It'll probably make its way to the mainstream media in, about a month or so. But the purpose of this is to give you, if you're curious, if you're long and you're looking for the parallel with gold, if you hate it, but you're trying to understand it in the concepts of gold, well, this conversation will be for you. We'll try and keep it short, but we'll give you all the information you have to understand what's going on. Now, you want to talk about the price, and it's high. It's high because of Trump. It's high because Gensler's out. And those are reasons for it to be high. Those are reasons for it to be higher. Does that mean it's, the end of the world or the beginning of the world? Who knows? But it's legitimate. Okay, so there's the 3 stories that we did in January, January 19th, 21st, and 23rd. Gold versus Bitcoin's intrinsic value special report. That's the first one. The second one is most of gold's value also comes from its non-confiscatability, in which they explain the similarities. And then they say Bitcoin ultimately, they believe, will displace gold in the 15 trillion non-confiscatability market. Now, this is one report they did, but I broke it into three so people could really get the whole point of it. And we did not agree with everything, but we laid it out objectively. We didn't disagree until the end, but let's go through a little bit of it now, because you're going to start hearing about these guys. They're well known. We're well known in a small community. Part one, the intrinsic value of Bitcoin is that it cannot be confiscated. All right. The intrinsic value of Bitcoin is that this is the whole report. The intrinsic value of Bitcoin is that it cannot be confiscated by the state, either through monetary inflation or through bank failure or through outright expropriation. Now, you and I, we can discuss and debate what the word intrinsic means. Hi, Peter Schiff, right? I'm not interested in that, in defining what you think the word intrinsic means versus what I think it means. But why is it valuable, right? They believe it has value because, like gold, it can't be confiscated by the state. And the confiscatability, there's three ways to confiscate something. They contend, and it's pretty accurate. Monetary inflation, that's how you confiscate wealth, right? Inflation is not going to debase gold. Think about gold, right? Bank failure. Well, if you have your gold and a bank fails, you don't care, right? Or through outright expropriation, meaning call it back, take it from you, right? And that's the first report, the first breakdown of it, right? And then in the second one, so I just lay out in more detail what I just said to you. The second part, the second part, we break down their comparison between gold's confiscatability or inconfiscatability, right? A non-confiscatability, and Bitcoin's non-confiscatability. And they compare them and they say, look, inflation's not going to hurt the value of gold, right? It's not going to steal value from gold. Inflation's not going to hurt the value of Bitcoin. Fine, throw it out. Agreed. All right. Whether it's limited or you can grow it, that's not the point. The second thing was it's immune to financial banking failure, right? So if a bank goes under, your Bitcoin still survives. Bank goes under, your gold's fine, as long as it's not in their vault and they're holding it. That's why you want to have your Bitcoin handy. All right, so throw that one out. And the third one is where they make their stand. And they say that Bitcoin is not confiscatable unless you give it to them, right? And gold is non-confiscatable unless you give it to them. And the key difference for them back then, they've tweaked it since then, but the key difference back then was you can confiscate gold. The government can have you call it back. And Bitcoin, they can't or they won't. Now, forgetting that remains to be seen, just I'm with the gold people on this. If you return it, number one. Number two, they're not going to confiscate it again. And number three, and this is the key one for me, you can't confiscate Bitcoin's value. Let's agree with that. But you can confiscate Bitcoin's ability to be used. And we can debate that, but convenience matters, and if you have to travel halfway around the world to be able to use something, well, then it's not truly money in that sense. I'm not pushing back. I'm just saying their thesis, their theory is very good, right? But I just think they overvalue Bitcoin's lack of confiscatability. You can throttle it, just like they do for gold. So that's the second breakdown. The third one is, and this is where we part ways. Bitcoin will displace gold in the $15 trillion non-confiscatability market. Part three of the intrinsic value of Bitcoin and gold finally explained. Now, I can't say they're wrong. The market is what the market is, but this is what they do. So those are all three parts. I gave you the summary. You don't even have to read them all, but I would say if you want some meat on the bone of what I just said, you want to take a look at those reports, especially the second one. And again, I brought all this up because they're going to be much more popular of a research firm, BCA, because in November, they did a report saying the path to 200,000. Now, here is the bottom line of that report. Now, remember what I said. confiscatability, right? It's the confiscatability that gives Bitcoin its non-confiscatability value. And when you compare it to gold, it's less confiscatable than even gold, according to their idea. So let me just read the bottom lines to you. First, given that gold's above ground market value is 19 trillion, the majority, around 17 trillion, comes from the network of holders who value gold for its non-confiscatability. Second, like gold, Bitcoin cannot be confiscated by monetary inflation, right? Or banking system failure, right? Additionally, and unlike gold, it is difficult for the state to confiscate it by outright expropriation. Yet Bitcoin, with a market value of 1.5 trillion, comprises less than 10% of the total market of non-confiscatable assets. Now, as Bitcoin's share of this market increases and the supply of Bitcoins reaches its upper limit, Bitcoin's price has substantial upside. Everything about that is absolutely true. It is. I'm sorry, relatively true. It can definitely take more market share from gold. I think it's just going to make gold go up more. But here's the if you're looking for like if you disagree, just chill. It's okay, right? The whole premise of this report, and again, I like it, is there is a non-confiscatability market. So let's call it a secrecy market. Let's call it a libertarian privacy market. And they're saying that gold dominates that market and that going forward, Bitcoin will be taking market share from it. I've already told you why I disagree with the whole non-confiscatability thing. We'll see. We'll see about that. All right. But that's the way it is. But the point is, it is going to take market share from another generation that says, well, this versus that. Anyway, so we have that full analysis at the bottom, and they basically said, in early November, they said, look, 100,000 is just a pit stop on the way to 200,000. We think it's worth 200,000, and they lay their argument out, and we're not going to get much more into it except to say that I think it's must read, especially if you already heard what I said about the first three parts. So the first three parts the first thing that I broke out for you, that's what you need to know before you read this. So I just gave you the bottom line on that, and we really recommend that if you are curious, if you are long and are looking for a parallel to why do I own this again? How is it like gold again? Or if you're just counting the money and you just want to, you roll around it because you feel really good about it. I can understand that. But this is where we are right now, right? So you may as well acknowledge it. Is it a bubble that could probably go to $10,000 next month? Yeah, sure it could. Sure it could. But this is intrinsic value is what the market perceives intrinsic value to be. That's what's going on. Peter Schiff should heed that statement. Not that I know Peter Schiff. News and analysis, UBS go for gold in 2025. We mentioned that went out this morning. UBS go for gold and it's time for real estate. That's the founder's version. It has a big piece on real estate and electric infrastructure, power, things like that. So it's not gold. Beijing strikes back. Right, that post is going to be going up, I think, on Jerusalem Post as well. And Trump versus Wall Street. This is an op-ed that we didn't do, but I think it's really good. It really lays out. Remember, I talked about Trump as a corporatist, hates finance, hates Wall Street. Well, if you like that concept and want to learn more about it, this is right up your alley. That's an op-ed from someone at the FT. Next, market news. Okay, this is why Bitcoin is up today. Right? This is why it broke through today. Jerome Powell said the economy looks better now than it did when the central bank began cutting interest rates in September, which means the Fed can move more slowly in reducing borrowing costs. All right, that's not why Bitcoin's up. That's actually bearish for Bitcoin, right? He also said, someone said to him, "What is Bitcoin?" Or someone asked him the question, and he said, "I view Bitcoin as digital gold." Now all the Bitcoin people said, "Oh, that's bullish," right? And so more people bought it. What he meant was they think gold is a speculative asset and Bitcoin is like gold in that sense. But it doesn't matter what he thinks. It matters what's happening in the markets. Second, Trump. Paul Atkins, a veteran financial regulator and a fixture in Washington's conservative financial circles, is President-elect Donald Trump's choice to lead and possibly overhaul the U.S. SEC. The dude is crypto friendly. He's a crypto advocate. And if you understand how to use crypto, even if you hate it, you know how to use a hammer. And they're going to use it to fix the economy financially. Think about it. Anything that drains financial assets from banks that are using subterfuge to keep things like gold down, well, then you should applaud that, right? The end of Gary Gensler's reign. But we'll see. He could be right. Federal Reserve Bank of St. Louis President Alberto Musalem, I'm not trying to say his name, said it may be appropriate to pause interest rates as soon as this month. All right, here's a little tip for you. It doesn't matter what he said. If he spoke on the same day that he spoke, then what this guy said doesn't matter. Okay? So in this instance, they agree with each other. But if he contradicted him, you'll only care about what Powell says. Private payroll growth was less than expected in November, reflecting a slowing labor market. Okay, so Friday's unemployment number is going to be pretty important. And there's the, we'll do a final market check, and there's the Bitcoin closes in on 100,000, but the ultimate target is 200,000. The ultimate destination is 200,000 plus. There you go. We're sharing that with you. Please don't share that with anyone else. It's very good. All right. I will say, if anyone is familiar with their work, what they tweaked from the beginning to now is in the beginning, they didn't talk about the network effect, which is something that I'm familiar with. This one, they're talking about the network effect. It's not the non-confiscatability for them now. It's the fact that so many people in a network agree that it's non-confiscatable. And that's what the network effect is. The network effect is when enough people use it, you can't afford not to have it, right? The first telephone was worthless, but what's the last telephone worth if you don't have one and everyone else is using it? That's the network effect. That's what everything that's going on in the economy is about now. The network effect. What's worth more, the thing that you buy or the pipeline that gets it to you, right? That's why you have Uber Eats. It's transportation. Bitcoin is a coin, theoretically, right? But it's also its own network. So network effect, gold, the network of owners of gold. It's about the network now. It's about the distribution. What is the dollar? Well, the dollar is a piece of paper. The dollar is the SWIFT network. Without the plumbing, nothing comes out either end. Okay, so gold. I had some comments on gold yesterday. I sat down with Jordan at the Daily Gold. Okay, I still think we're in a sideways environment. All right. But actually, silver's the more interesting one today. Let's talk about silver. Really, really cool what happened yesterday, I think. I took my moving averages down. All right, so here we go. Silver's bouncing around between, not even bouncing, was dead on the 100-day moving average and the 50-day, 100-day moving average, and the 50-day moving average is right around here, right? If it gets above here, forget about it. I think it's going to rock. And that coincidentally agrees with Michael Oliver's level, which is 3187 in February March futures, and Jordan's level at the Daily Gold, which is roughly, give or take, the same area, 32, because of just a classic channel breakout. So, look, if gold gets above its 50-day moving average before silver, just watch silver. If silver gets to the 50-day moving average and gold's already above it, forget about it, I think, right? If silver gets to the 50-day moving average and gold's not above it yet, then just, wait a second, see what's going on. Anyway, so that's it. Gold's up 2, silver's up 5, and, Bitcoin's up infinity. Why do you own gold? Because it's a hedge against humanity's stupidity, right? Why do I own Bitcoin? Because it's a hedge against humanity's genius, right? If it's a hedge for gold, right? That's how I look at it. Okay. Ultimately, Anything that's made by man can be destroyed by man. So everything else about that, whether it's CIA or whether it's some guy in a basement or whether it's God himself who made it, who cares? It's man-made, right? It's man-made. All walls made by men can be destroyed by men. All right. Have a great day.